What's up, beautiful people? Welcome back to the channel that is empowering you with the knowledge to help you build generational wealth. My name is Mia, and I reveal the financial education that we do not learn in high school. And in this video, we are going to continue with Credit 101. Part 1 covered the basics of what is credit, defining debt, and illustrating the difference between credit purchases and debit purchases. If you missed it, I will have it linked in the description box as well as at the end of this video. But right now, we are going to discuss the infamous credit score, and you're going to want to stay tuned to the end so that you can learn what it is, how it is calculated, the benefits of having a good credit score, and how a bad credit score can affect your life in more ways than one. So without further ado, let's get started. What is a credit score? It is a 3-digit number that determines your creditworthiness. It gives any lender, financing institution, or credit agency an insight into whether or not you will pay them back and on time. And what you will learn if you do not already know this is that your credit is run by anyone who has to trust that you will pay them in what you owe, whether it's for a loan or a run-of-the-mill utility bill. But let's not get ahead of ourselves. Your credit score is calculated based on 5 components: your payment history, the amounts you owe, length of credit history, which is basically how long you've been borrowing money and paying it back, hopefully, new credit, and the mix of credit. Your payment history is the largest factor in determining your credit score simply because that is the one thing that anyone that is loaning you money wants to know. Do you pay your bills and on time? Now, if you do, then your credit score will reflect that you are a low-risk borrower. In other words, you won't take their money and run because remember, they are counting on that interest payment to make a profit off of you. The amounts you owe indicate whether you have a lot of debt or not. If you have too much debt, then the lender may wonder if you will be able to afford paying them since you're already paying so many others. Or the amount of debt could be how much of your credit limit that you're using. The magic number is typically 30%, so you do not want to max out your credit cards. It's not a good look, okay? Don't do that. When it comes to the length of credit history, honestly, the longer you've been in debt, the better. That didn't sound good, but that just is what it is. It's one thing to say that you paid all of your bills on time for a year versus you have consistently paid back your debts for 5 years in a row or 20 years. Like I said, the longer that you maintain a good credit history, the lower risk you appear to anyone running your credit, which is why credit is pushed on younger people so that by the time it matters, they will have a healthy length of credit. The problem is they typically have an unhealthy relationship with it by then too, which is why I don't want to just simply tell you how bad credit is. Credit is the best. I want you to understand it so that you don't get taken by it. You don't want a ton of new credit on your credit report. New inquiries typically lower your score because it is an indication that you are increasing your debt. And if you watch my previous videos and you learn how your debt to income ratio factors into getting approved for a home loan, then you will know that higher debt is not what you want. And finally, the mix of credit just applies to whether or not all of your debt has only been one type of credit account or if you have had a healthy mix of credit throughout your credit history. Who uses your credit score? When you want to buy a new car and you need a car loan, they'll run your credit. If you want a personal loan, they will run your credit. But guess what? Non-credit reporting agencies will also need to know whether or not your credit score is acceptable, which leads us to the 5 benefits of having a good credit score and the impacts of having a bad credit score. Really quick, there are actually 3 types of credit scores. There's good credit, there's bad credit, and no credit. Not having a credit score is not the same as having a bad credit score. Yes, you heard me right. If you do not have a credit score, that simply means that you have never applied for a credit account, nor have you gone delinquent on any bill payment. Having a bad credit score means the complete opposite, that you have failed to pay your bills and it is reflecting negatively on your credit report. The reason that no credit is often associated with having bad credit is because you don't have any record of paying anything back. This is why phone companies run your credit before establishing a new contract, and utility companies run your credit before establishing your water or your electricity. They want to know, are you going to pay your monthly bills? And even though they don't report positive payments, they will absolutely, without question, no hesitation, report missing payments, which will hurt your credit score. a good credit score, one of the benefits is that you will not have to pay a deposit. If you have a bad credit score or no credit history at all, then you will more than likely have to pay a deposit that the phone company or utility service will hold on to for a year. Now, if you make your payments every month on time for a year, then they will give you your deposit back after a 12-month period. But if you violate your contract, they will apply that deposit to cover as much of the missing payments as possible, and they're going to report you to the credit bureaus. Another benefit of having a good credit score is that you qualify for lower interest rates. In part 1, we talked about the cost of borrowing money and how the higher your interest rates, the more you will owe on that debt. But if you have a good credit score, not only will you qualify for the loan, but also a lower interest rate. Here's a quick example. Let's say you pay 2% on a $20,000 loan. That's $400 in interest. 4.5% doesn't seem like much more, but 4.5% on that same $20,000 is $900, which does seem like a lot more than $400. Now, with utilities or a new contract with Verizon, you can still get them with bad credit. You'll just have to pay a deposit. But when applying for loans or credit cards, you can be denied if your credit score is not up to par. And loan sharks count on that. Loan sharks are those places you see that offer financing even if you have bad credit. You think they are out to help you, but instead they charge you outrageous interest rates, like 20% interest on a car. Did you know that good credit scores can actually decrease your insurance rates? I kid you not. Having a better credit score can reduce your car insurance, your home insurance, your rental insurance, all the insurances. So if you have been working on improving your credit score and you're starting to see some results, I would definitely reach back to your insurance companies and let them know. I got y'all. Now, one of the biggest benefits of having a good credit score is qualifying for a home loan. Now, your credit score is only one of a few factors that they consider, but it is a huge factor that could prevent you from receiving that pre-qualification letter. Even when you're applying for rental properties, your credit score can cause a landlord to deny you access to their property or just charge you an excessive deposit. The last impact that a bad credit score can have on you is not well known, so if you stayed this far, leave a comment and let them know that it's worth watching till the end. There are a lot of people who don't realize that choosing not to pay your bills can cost you in more ways than just your good credit. If you apply for a job that requires any type of security clearance or where your financial standing could be a consideration, your bad credit could disqualify you from receiving that job. Yes, your credit score can cost you your career. You can have the offer on the table and literally watch it get snatched away if they feel your credit standing poses an unnecessary risk. So keep that in mind. There are 3 primary credit bureaus that maintain record of your credit score. They are Experian, Equifax, and TransUnion. I recommend that you check your credit score often. Even if you aren't seeking to take out any new debt anytime soon, checking your credit score helps you keep track of your goals. It's how you monitor your credit score and make sure that no one has attempted to steal your identity. The struggle is real in these streets. Each credit bureau offers 1 free credit report every year, so you can check your score for free at least 3 times a year, and I recommend you do that at a minimum. But that wraps up this video. I hope that you enjoyed these introductory lessons into credit, and I hope that you subscribe so that you don't miss what's coming up next. Until the next time.